That's his motivation speech.
Welcome back to Higher Exchanges. I'm your host, Jesse Redmond, Head of Investor Relations and Business Development at Leaf Brands. I'm once again joined by Morgan Paxia. He's the co-founder of Poseidon. Morgan, how are you, my friend?
I'm doing well. Excited for today's conversation with these two great fellows we have with us.
Yes, we are not alone today. First, we have Jason Wild. He's the Executive Chairman of TerrAscend's. Jason, how are you?
I'm good. Nice to be here.
A little bit tired, if we're being honest, right, Jason?
Yes. I was every time after our earnings, ever since we moved it to you doing our calls at night, I can't fall asleep until like 3 a.m. I'm just all like full of adrenaline or something like that. So, but happy to be here. I'll turn the adrenaline back on for you guys.
And last but not least, we have the ball of energy. His name is Ziad Ghanem, CEO of TerrAscend. Ziad, how are you doing?
I'm doing great, Jesse. Good to see you, Morgan. Good to see you. Jason, when you were trying to sleep, I was driving across the state for 4 hours last night, and I was on the phone the whole 4 hours.
I think I saw you. You tried me a couple of times.
I did.
Oh, that's great. Well, thank you for joining us. We got a really good agenda here today, especially in the back of the earnings call you had yesterday. But before we dive in, just thought it'd be good for everybody to hear a little bit about you guys. And why don't we start with you, Ziad? Just as a quick backstory, how you got into cannabis, and then also some of the key learning lessons that you've had in your time in the industry so far.
Yeah. Look, I've been in cannabis now for 4 years. I'm a pharmacist by training. I spent out of pharmacy school 17, 18 years at Walgreens, had 13 or 14 different roles, starting with a small pharmacy, then a district, then a region, then a national responsibilities, then global responsibilities. And Steven St. Rose was the chief HR officer at Walgreens. He moved to cannabis, and he talked about how cannabis could use a leader who does not get stressed, who every morning starts fresh. And I said, this is not super convincing. You're describing an environment that is pretty challenging. So from a career perspective, I was convinced that I could come and help and grow with the industry in the early stages that is in. And then it took me literally a fraction of a second to find the purpose by just interviewing few patients and customers to learn more about cannabis. And the story was, hey, we replaced 4 controlled substances between Xanax, Soma, hydrocodone, and OxyContin with a 5 milligram THC gummy, and we won our life back. So that was pretty quick for me to say, all right, I'm in. Started in cannabis for a quick 9-10 months in a private group, then met Jason, and been here for 3.5 years now. What I have learned, Jason, I don't know if you remember when you were interviewing me, I told you this, and it's more and more confirmed 3 years into this. What I learned is for cannabis leaders to be successful, you have to be agile, and you have to be a uniter between the OGs and the individual that 15, 20 years ago came into this industry, and because of the hard work that they've done, we are where we are today. And then the new experienced leaders that are not the cannabis savvy, but they know what IRR is, and they know what return is, and what Jason invested in. And then don't abandon either side, and be a connector between those two, and be able in the morning to engage somebody in your cultivation center, and then motivate them and hear their pain and deliver to them. And in the evening, be with President Biden or Trump or a senator, and then convince them why cannabis is right. So having that agility, rolling your sleeve, is one of the biggest learning that I think if you don't do it, you sink pretty quick.
Yeah, I forgot about that. When I first interviewed you, you talked about how you had to figure out, the companies that would be successful will be the ones that are able to meld the suits and the OGs. And that's definitely been true, and something that I think we've done a pretty decent job at.
Yeah. A lot of that still continues today, right? I mean, it still is that crossing over.
Yep, absolutely.
Yeah, when we were talking to Obi Strickler a few months ago, he said, Jesse, you provide a valuable service. You've been bridging the gap between the hippies and the suits. And so it seems like that is something that does permeate the industry, is trying to put those two pieces together.
Yeah, and it's hard.
Yeah, it is. And then the other thing that we all know about, is how unfair and how punitive this industry is treated. And you have to be an eternal believer that believe that wrong will never be right, and right is always right, and wrong will never be right. And we live in a wrong environment today, and it's a matter of when this will be fixed, because you cannot treat a dispensary that is next to a pharmacy, next to a liquor store, so much different when the data and the science is showing that the patient and the customer is benefiting more from this versus this. Just unfair and it's wrong.
Yep.
That's right. Jason, you come at this with a bit of a different experience, being an investor and an operator. Just curious, what lessons that you've learned over these years now.
Yeah, what lessons? Yeah, so definitely sort of how important resilience is, and how important to have the people around you be resilient. We had over the years, we more than 3 years ago at this point, we had some turnover and some we had a lot more turnover with our executives. We've had very little over the last 3 years, ever since Ziad came in. But I remember in the beginning there was and it wasn't the CEO, there was one of the top executives. I would get on the phone with him and be like, "How's it going?" And he would give me a long sigh and say, "It's going." And it would just like Ziad likes to say, or used to say when we had some of the older employees with us, that this guy had the ability to drain my cup of coffee in the morning pretty well. But this is a tough industry. You need to work with people who are not overly or cockeyed optimists or something like that, but people who are resilient and don't get too beat up when, because a lot of times, we'll hear some piece of news, something's happening at the state level or whatever it is. It's like, you can't get too up or down, because 24 hours later, it could be the exact opposite of that. You have to be able to keep an even keel. Ziad's great with that. The rest of the team is great with that. And we just got to, sort of keep our eyes on the prize and think about this whole thing over the long term. So I think that's one of the main things that I've, sort of learned over time, being the chairman here at the company. The other thing is just patience. I mean, these things, cannabis has been illegal for so long that maybe it was a little crazy for us to think that it was all this progress was going to happen over the short time period that we expected it to, and it certainly hasn't. But we're here for the long haul. We're looking to build, something that we think about this company as, we're going to be running this thing for the next 20 years. Doesn't necessarily mean there won't be an exit before then, but we think that that's the only way to build a strong, sustainable company. And as I tell Ziad often, he's stuck with me. We're gonna be working together for a long time.
Yeah, but just wait until you call me next time and you ask me how it's going. I'm gonna say, I guess it's going.
but it gets to all of us guys. Like Morgan and I, before we got on camera here, before you showed up, Jason, backstage, I asked Morgan, "How's it going?" And Morgan kind of gave me one of those. He was like, and that's just friends being honest with each other. So I think all of us feel some of that part. Do you have any tips, Jason, in terms of if you're an operator or investor? I think we have a lot of operators too that listen to this podcast. How to keep that even keeled mindset and not get too down by the grind every single day?
I think it's surrounding yourself with the right people. It's not like, I talk about resilience and it's so important. Some days I'm a little beat up, or find something out and I just it throws me off a little bit. I like to talk to Ziad about it's a Jewish thing about when somebody dies that you sit shiva, which is for a week you pray and do all of that. And I say to Ziad often, if some piece of bad news comes my way, well, first of all, very often it changes within 24 hours. But even if it doesn't, sometimes it just takes me 24 hours to Ziad will joke and be like, "Okay, you sat shiva for it, you're okay, and you're ready to move on." I've just, but that's also not getting too up when things are good. I try to, and I've learned this from running my fund as well. Have to have an even keel. I've been reading some books. My wife has some books on stoicism, where it's sort of like either way, good or bad. It's that's sort of life. So I think that's it. And having Ziad and Keith and Lynn, working with them every day. Everybody, if one person's feeling a little bit down, it's sort of on the others to help lift us up and get us on track and refocused.
I think we need to have an annual cannabis 24-hour day where we just sit and do that. A cannabis Shiva, right?
Yeah, totally.
All right. Well, Jesse, why don't we, back to you, Jesse.
Oh, you're good, man. Yeah. So, I think in terms of things to feel good about, like you said, giving you some energy, Jason. I know there's a lot of adrenaline that goes along with those earnings calls and all the analyst calls afterwards. But I'm guessing that can be draining in a tougher quarter, whereas this quarter was a pretty strong one for you guys. I think you probably were pretty happy with the results, made some good progress. Do you want to walk us through some of the big picture highlights, what you're proud about, maybe pulling out any challenges on the flip side?
Yeah, absolutely. Z, you want to take that to start, and then I'll jump in and interrupt you?
I'd love to. And if it's okay with you, I'll just mix the year and the quarter together on what we focused on and what we accomplished. Look, for the last few years, we had a culture here that we said team members come in first, and we spent a lot of time in 2024 focusing on our team members, making sure we're transparent with our team members, making sure that we explain the what and the how and the why with every decision that we've made. And we have seen that engagement improve tremendously with team member. That does not show on the 10K, that does not show on the financials, but we believe if you nail the team member, then you win with the customers. With the customers,
I want to interrupt you on that point. Even I just looked at we just got the list of all the attendees for the conference call. I think there were 209 attendees. Out of that, there were, I believe, 50 TerrAscend employees that dialed in and listened to the call. Yeah. So certainly engaged.
Yeah, we do our town hall, and we have 250 to 280 team members that dial in quarterly just to listen the what, the how, and the why. So team members, we focus a lot, and we believe when we win with our team members, is that from? I hear some noise, but I don't know.
You know what they're doing? They're building a house, as you know, Ziad, next to me, and there's a drill going on.
Fine,
I'm going to mute myself until I.
Perfect. And then the team member then take care of the customer. We spend a lot of time focusing on our customers and really being reliable for our customers, being reliable for our consumers in quality, in innovation, and in pricing, really offering that trifecta value for them and anchored around good customer service, both at retail and wholesale. And when you win with those two, then the P&L becomes easier. From a finance perspective, there's price compression in different states. Every state is in a different cycle of its life. And we focused on our COGS, we focused on yield, we focused on automations, and that is what allowed us to gain back our gross margin and do 140 bips improvement from Q3 to Q4 and get to the 50.2 gross margin. OPEX is another area where we said, all right, isolate operating expenses that are linked to revenue. Everything else, let's do a zero-based budget, and let's look at every line for all 111 million and say, is it nice to have or is it must have? If it's a nice to have, then it's out or parked or will come back one day. And if it's must have, is that the best price? Is that the best service provider? Is that the best deal? And as a result, we announced that we will be reducing on top of what we reduced in Q4, we will be reducing an extra 10 million in 2025. And those are budgeted, those are in line, those are found, and we measure every week. Balance sheet. We focus on balance sheet in 2024 that led us to exit the year with all our debt refinanced all the way to 2028. Now we're focusing more on how can we further lower that interest rate now that we don't have to refinance. But that was easy to do in a non-dilutive manner without any warrant, because we own 150 million of our real estate.
Hmm.
And because we don't have any cash burn. Instead, we are positive free cash flow. So that was an area. And then Jason and I spent a lot of time educating both at a state level, at a federal level, the administration and the lawmakers and the legislators on why cannabis is a good alternative, and how do we lift some of those punitive codes. And maybe the last one is M&A. We're not happy with the speed of how we're doing the deals, but our appetite, our hunger, our determination, our ability to do those deals has not changed. It's just we're waiting for the acceptance phase for some of those sellers to set Shiva versus the high valuation that they thought their business is worth, where we're staying disciplined not to do so. Jason, is the noise gone? Anything I missed?
I don't think you missed anything, but I think the noise is mostly gone. So I'm off of mute, obviously.
Yeah, what you're saying on the M&A side really resonates as not specifically speaking to M&A that we're trying to do at Leaf Brands, but just in terms of, deal structures and conversations that you have. Sometimes people on the investor side just see when the press release comes out, and, that's the exciting, rewarding part. But for each press release that comes out, there's so many deals that don't work out and so many hours that have gone into those where you got close, but didn't quite get there. And so, as an analyst, I sometimes was frustrated by the slow pace of things. And I'm like, why aren't they doing this more quickly? Now that I'm on the operator side, I realize how much goes into every single one of these.
Yeah. And also not being afraid to walk away from a deal.
100%.
Signing an LOI and moving towards all the definitive docs. And then, the business starts deteriorating and it's not what you thought it was. I've learned through some mistakes in my past and with different businesses that you all the way up until the time that you sign the definitive docs, you can always walk away from a deal, and you should never be afraid to do it. So that's that's part of it. Like in Ohio, we were working on a bunch of deals, and the market once the switch was flipped, the market didn't do what we thought it was going to do, and it wasn't coming close to the forecast that these targets were showing us. So I'm proud of the fact that we were disciplined there and didn't. I mean, I know that we made a lot of noise about how we wanted to get into Ohio in a bigger way. That we wanted to be there within the first several months of the program, but we'll never do a deal just to save our pride if it means that it's going to be a deal that's not going to work out well for the company.
Yeah, after this, I think I don't know if it was good luck or strong execution, or probably a little bit of each in Maryland, right, where you guys went in there and got your 4 stores and got set up really well. I think there's an expectation maybe Ohio would be so smooth and work the same way, but it has been a different environment out there. Let's use this as an opportunity to transition to talking about some of the states that you're in. Do you want to talk about Ohio and kind of what you're seeing there, Jason? You mentioned below expectations and how that's made deals a little bit more challenging. Why do you think that market is lower than expectations, and how do you see that evolving moving forward?
Yeah, I think there's probably a few reasons. One part of it is that a big part of Ohio borders on Michigan, and prices are so much lower in Michigan that a huge amount of the population of Ohio is still driving over there because the prices are probably over 50% lower in Michigan. I think the other part of it is that the state, in terms of the rollout of the program, it was not great. I don't even think they were able to be called rec dispensaries or adult use. I think they were called like non-medical dispensaries. I think they still don't allow higher dosage concentrates and things like that. There's still no pre-rolls allowed in the state. There's still a lot of restrictions around advertising. So I think that's part of it. I think the other part of it is, there's just like in the beginning when we were looking at it, and by the way, we're still want to get to the cap. I think it's 8 in Ohio. We still want to get to that cap. We just think we're going to be able to do it, for a much lower cost than we would have done it a year ago. But we also felt strongly in the beginning. We expected that we were going to buy something that also had cultivation and manufacturing, because in most states, almost every rec state before this one, there was a bit of a shortage of supply in the beginning when the program started. Well, that certainly has not been the case in Ohio. I mean, we've talked to operators that where their wholesale business since Rex in the first few months after Rex started, their wholesale business was up 0, which means that there was too much, either too much inventory out in the channel of stores stockpiling because they thought that they were going to be in short supply, or also on top of that, too much capacity was brought online in preparation for Rec. So at this point, we don't feel any need to have that safety of having our own cultivation and manufacturing. Once we get closer, to the cap, or maybe even once we're over 5 stores, then we would start looking probably a little bit more seriously at bringing in cultivation and manufacturing at that point, because we would know that we had sort of those captive stores to be able to sell to at the very least. But that's where our thinking has changed as it relates to Ohio. It's still, there's still some really good assets out there. They're just not what the sellers thought that they were, were going to be, a year and change ago.
And to get to 8, you need a tier 1 cultivation facility. Is that right, Jason?
I'm not sure. I think you can get to the 8 stores without having a tier 1 cultivation facility, I believe.
Okay. Yeah, it's one of those things where I understood the regs for about a month, but now that's faded. I'm not
me too.
Yeah,
me too. And we're only at 1 right now. I mean, we're some people, maybe it was in the follow-up, some of the follow-up calls. I can't remember if we brought it up on the call. I wouldn't expect us to get to 8, this year. Maybe we get to 3 or 4 by the end of this year. But we're gonna be patient. We've got no FOMO whatsoever, and we've had other good opportunities. I mean, in a lot of ways, I'm more excited about the Jersey assets that we're looking at than the Ohio assets, because there we look at these assets. Price expectations are even slightly lower in Jersey than they are in Ohio for these retail stores, and there, we run the TCF and the MPVs on these assets. Like, what are they worth to the seller, and then what are they worth to us, because we can go in and say we've got roughly 12% market share in Jersey. Let's assume the stores we're looking to acquire, we've got about 12% of the shelf in those stores, but we get them to the 60% of shelf that we have in our 3 stores in Jersey, and we're going to make a whole lot more money than that independent non-vertical store owner was going to make just buying all third-party product. So we're pretty far along on a few things in Jersey. Ziad let the cat out of the bag yesterday, even though Keith told him not to. He was too excited and mentioned that we were hoping that for yesterday's earnings call that we would have a deal in Jersey to announce. But as talking about doing deals, they almost always take longer. I've had so many deals where for 4 weeks we thought we were signing it within 2 days, and there's just stuff that comes up, and there's structuring things around New Jersey, but we hope to be able to sign and announce our first store acquisition in Jersey in the coming days or weeks.
My favorite part is Ziad let the cat out of the dog, and Keith told me
out of the dog,
out of the bag, and then Keith, we're talking to adults. He repeated it, and now Jason is repeating. I'm glad I did. You guys are as excited as I am.
I mean, feel free to break the news right here. We can do an 8K after this. We all set. It'll be great.
Yeah, we're not that close. But we have several in the pipeline in Jersey. And the thing about Jersey, and this is something we learned from. Jersey is our only state that we built, to this point completely organically, from applying and winning the license and building out our stores and choosing the sites and all of that. The thing that was really clear in Jersey was we had 2 out of the first, I think, 13 or 17 stores that were open day 1, and those things hit the ground. What's the saying? Hit the ground running. We're doing over $30 million in run rate sales pretty much immediately. And that's because there's so much awareness around the first day of rec, especially when it's all in one day. Somebody's ringing my doorbell. What we've seen is all the stores that have opened now later, the vast majority of them have not done very well. There's tons of stores in Jersey, and I think there's over 200 stores now that are doing like $2 or $3 million in sales. There's still a few that are doing, 8, 10, 12, 18, $20 million. Those are the ones we're really zeroing in on. But it's just, it's made us realize, even as it relates to Ohio, like, we're not very excited about paper licenses, because those are not, you take something and you start it with the first day of rec versus that same location and the same store and same footprint, and you open it up a year and a half later, it's never going to hit the same level of sales that store that opened the first day. That's what's that's what makes these stores, the ones that are doing really well, that were latecomers in Jersey, makes them even better. And those are the ones we're really zeroing in on. I'm going to go run and see. I just want to make sure it's not my wife at the door.
Okay, no worries.
Feel free to add whatever you'd like.
It says, Ziad, in New Jersey, is it you have 3 doors right now? Is that correct?
Correct. We have 3 stores in New Jersey, and we can add up to 7 for a total of 10.
And how does that extra 7 work? Are those social equity?
They are social equity.
Okay. And how big's your cultivation footprint there?
Yeah. So look, the 10 million that we announced in CapEx expansion in 25 is to address some of the expansion in Clinton. So that will allow us to increase flower capacity, but then also to increase our kitchen space to continue to launch new products. So we would be able, with the CapEx expansion, not only to supply our store at the 65% verticality that we have, we can play a little bit with the verticality and bring in those stores, take them from what Jason described as 12% shelf space to have a mixture of 55% verticality, and that we're prepared to do that, and the expansion will allow us to do that.
That verticality number seems high to me compared to what I often see in California. Is that typical for you guys to have half the store be in-house products?
Yeah, look, the verticality is not determined by the leaders of the company. The verticality is determined by the consumers and by the trade space. The lowest, I would say, is 40. The highest is 70. In states like New Jersey, I would say the sweet spot is 60 plus or minus 5 in New Jersey and in Maryland, because if you could produce the variety of products on your menu plus the right quality and the right price, that's what will allow you. And those are linked together between your retail store and between your retail sale and your wholesale business. But yes, in the Northeast, an average of 60 is decent.
Okay. And are you doing extraction in New Jersey as well yourself?
We are.
Okay, great.
So
another good state. Go ahead.
Yeah, sorry, just real quick, just talking about New Jersey. Did you? I know yesterday you talked quite a bit about the mix of retail versus wholesale. Was that a New Jersey discussion? Remind me, and anything you can share there, like how much from what's coming out of the facility is for wholesale versus your own stores?
Overall, as a company, our wholesale business is very close to what New Jersey is versus retail, and it is around 25 to 30% in wholesale versus the remaining in retail.
So another good state for you guys has been Maryland. You guys didn't have any assets, I don't believe, before getting into that adult use flip, which I think was that July 23? Yeah, time flies. So July of 23. Now you have 4 doors there, 4 strong doors, and cultivation. I heard of the call, guys. You're expecting a 70 million run rate. You're expanding gross margins, and you're expanding your cultivation there by 50%. I don't hear the same great things from everybody about Maryland. Like, I've heard different experiences with Maryland. I remember when I was covering MariMed, they had a store there. That was a good store and a good asset for MariMed, but certainly not the kind of numbers that you're talking about. Could you talk a little bit about the market in general, and in particular why you're finding more success in the state? Yeah,
one thing, I'll let Ziad take most of this, but one thing is we built a grow that we finished at the end of 22. So we had minimal sales in Q1. We had no retail until 23, but we did build that grow sort of in preparation for we thought adult use was going to be coming. And the other thing is we're already at a $70 million run rate in Q4 of last year. So I just wanted to make that point. Ziad, feel free
Yeah,
to.
yeah. I was gonna say that we exited the year at 70 million run rate. So look, Maryland. Jason started with the story. We had negligible revenue. We bought the 4 stores pretty quickly. We bought very high stores with high efficiency. We think we have the number one retail position between those 4 stores in the state. We had a market share that ranked us 13th in the state. So we went through 3 phases of our journey. The first phase was to build the first 4 rooms and to take the verticality in those stores from 0, because they were 100% not our products, and we went up from 0 verticality to close to 45-50%. The second phase, we opened the fourth another 4 flower room that came online, and that helped us grow the wholesale business and then strengthen the verticality. And that took us from the 13th spot in market share to 6th in the state. And now we are pretty clustered, just less than 2 full points behind number 2, 3, 4, 5, and 5. We part of the capex that we shared, there are 4 new rooms that are coming. They'll be done at the end of this month. They'll be planted. Harvest will come down at the end of Q2. And with the reaction that we are seeing from the consumers in Maryland, with the high quality products that we are producing, and all the playbook that we brought in from New Jersey, from the strain libraries, et cetera, we expect in 2025 to improve further on our market share. And we said yesterday we'll get to that top 2 spots. Consumer behavior is similar to elsewhere, both at the macro level, at the cannabis level. It depends in the urban versus rural store. In some places, the basket size is down, but the trips are more frequent. In other cases, you have healthy basket size that were not impacted, and the premium is performing better than the value brands. We look at each state and each store differently, and we address the challenge that we see in that particular store. For example, if we see a store that the consumer is doing multiple trips, and a consumer has a higher risk of turning over and do a poly retail shopping, then we launch some products that address their value with bigger packaging, and that helped us retain those consumers, increase the loyalty of those consumers. So I can't comment on what the competition is seeing, but I definitely see the market share that we're winning, and I see where we're taking it from. It's divided amongst everybody.
And are you guys still doing the Cookies Corner section of your stores in New Jersey and Maryland?
Yeah, the only two partnerships that we have is Wana and Cookies, and our strategy is to have our value brands adjacent to our high quality brand, adjacent to Wana and Cookies. So yes, we still have the same partnership. In Michigan is the only place that we have Cookies branded stores. Everywhere else is just the corners.
Okay.
When we do it.
Anything else, Morgan or Jason, on Maryland before I move on?
No, I think Ziad covered it.
Okay.
Yeah, I mean I think Ziad, I had to go get the door, but you also talked, I think, over the course. We went from 13 ranked in the beginning of the year to 6, and we're only 2 points away from being number 2, which is what we're aiming for. The other thing is did I
love
do
all
those
your
balloons?
graphics. Yeah, you get the thumbs up graphic.
Yeah, that's awesome. The other thing was we were able to get our gross margins in the state from 25% at the beginning of the year to 50%. I didn't know if Ziad mentioned that, but that's something else we're proud of.
Yep.
No, that's good. So on the, I don't know if we'll call it the more challenging side. When we get to Michigan, I'll call that the more challenging side, but we'll go through a transition state before we get into Michigan, and that's Pennsylvania. And so they're listening to the call, guys, and reading your reports. It seems steady but flat revenue. I think you talked about value doing better there. Jason, I know when we talked a couple of years ago, you were really excited about Pennsylvania because you do have the potential for a lot of capacity there. You have potential there for a high store count. But I'm guessing there's some fresh frustration on both of your sides in terms of how slow that market has been to move to adult use. And from what I hear from most operators, it's just an okay state in the meantime. So with that preamble, maybe you could talk a little bit about your perspective on where the state is in that transition. Like, when do you think we'll get adult use to happen, and how are those assets performing while we wait?
Yeah, absolutely. So yeah, it's definitely been frustrating the last few years. Didn't make sense that, Pennsylvania's leaving all of that money on the table. It does seem like Governor Shapiro is very strongly behind getting a adult use bill passed this year. Should be hopefully in the second quarter. I went up to a dinner with him in January, and he was very forceful on the fact that he wants to get it done, that the state needs the money, and that he is, Pennsylvania, as I'm sure you know, you can't just do it by a voter referendum. That's part of the reason it's fallen behind the other states. It has to be done through the legislature, and the Republicans want something out of this whole thing. And he made the point that he is ready to, quote unquote, pay a premium to get it done. He's ready to negotiate with the Republicans, give them something that they want. Maybe it's this, they want these games of chance, which I think are like, video slot machines or something like that. But he definitely wants to get it done. Ziad and I are actually going up for a dinner next week with the top 4 Republicans in the state. And we're going to, hopefully be able to make some progress with them as well. There's a little bit in Pennsylvania of this like anti-MSO, probably in a lot of states, anti-MSO, anti-big company. They somehow think of, of us as big companies. But I don't think there's anyone better than Ziad to come in as the CEO and show that he's a pretty down-to-earth guy, and it's not some some big soulless company. Ziad has this way of saying, and I'm sure he'll use it with them, like, hey, don't say MSOs or out-of-state companies. When you're talking about us, say, Ziad is doing this or Jason is doing that. And I think that we'll be able to make some progress there with the Republicans. They're generally at this point not against the program either. They're just looking to negotiate with the governor for some of the things that are priorities for them. So I think that we have the best chance that we've had, and it's certainly not a layup, but we have the best chance that we've had versus the last 3 or 4 years. I think it gets done this year. Ziad, anything you'd add to that?
No, I agree with everything you said. There are enough new things that are happening and that we're hearing from both sides of the aisle that make us more hopeful or make us believe more. And we're, as a company, you're right. You mentioned it, Jesse. Our cultivation facility in Pennsylvania is bigger than all our cultivation facilities combined in all the other states. We're currently at 25% capacity usage. We can weekly, almost monthly, we review our set ready, and we're ready on the go with no investment needed. Flip off a switch. The team from seed to wholesale are ready, so it'll be a great state for us, and we're super excited about it.
And we have we're a little smaller than others, and some of the other operators are at 18 stores or even 21 stores. We have 6, but they're pretty good stores. I mean, they're as medical stores, I think they average $8.5-9 million or so. I mean, we had our two medical, and it's not going to be the same as Jersey because there'll be more stores that open. But our stores there that were open for the flip, one was doing $5 million and one was doing $7 million, and they both went to over 30. Mm-hmm. Not saying that's going to happen, but I think there's good upside, from these 6 stores once rec goes, and then there's huge upside from a cultivation and a manufacturing perspective, and also should really drive much improved margins in Pennsylvania as well, because we're carrying this whole facility and only cultivating in 25% of it.
Well, how do you think about the risk of them trying to go with the state-run model, Jason? Do you think that's a real thing?
I don't think so. I mean, when we talk to, all the Democrats we talk to, they would be the ones who you would think would be more behind it. And they say that they don't think it's going to happen. And the Republicans, like, they want to do away with state-run, liquor stores. So there's no way that they're going to get behind state-run cannabis stores. And what's the need? I mean, there are Ziad, how many retail medical dispensaries are there in Pennsylvania? Like almost 200?
168.
Okay. So, and I think there's some more that are opening because they give the non-vertical guys the ability to open up some stores. So there's not a need. And when we were with the governor, we pointed out there's lots of things that make it like those state-owned liquor stores, if they started selling cannabis, they could get debanked.
Mm-hmm.
And there's we sent them a whole other list of reasons, but that's not something that's keeping us up at night.
Okay.
I said 168. It's 186. I flipped them. So.
Oh, okay.
Dyslexic.
Yeah.
So let's run down. Go ahead, Mark.
Yeah, just a question on Pennsylvania. And Jason, I heard you mentioning this on the call yesterday. It's kind of like Florida, where if you have a license, then you can open up as many stores, right? It's really just contained within your license. Did I understand that right? Or is there a cap on how many licenses you can open, or how many retail you can open under your license?
There used to be a cap, but it's not. You don't have the right to open up those stores. You can buy stores, and that cap was supposed to govern how many you could buy. So that was what was 18. But then that cap, there was at least one operator who got to 21, and the state didn't do anything about it. So the view of everyone who follows the industry now is that there is no cap, but that doesn't give you the right to open up all those stores. You would have to acquire your way we'd have to acquire our way beyond the 6 stores. And we've looked at stores in Pennsylvania. The problem is the problem up until this point, and the reason we haven't gotten any, I mean, we bought 3 dispensaries. We had 3 that came with the original Ilera purchase. And then we did buy another 3 back in, feels like forever ago. I think it was like 2021 or 2022. But the thing is, it was like the opposite of Maryland. Maryland has this 4-store cap, and a lot of the other MSOs and operators were already at their cap. So that's why we were able to get into Maryland and find some great deals, because there was no competitive tension. There were no other, bidders. Pennsylvania is the opposite. Since there's no cap, all of the operators could be bidding for these stores, and in our view, it's kept the prices of those assets relatively high. I mean, we're like Ziad likes to say, we're stingy. Like we want to pay good multiples, attractive multiples on medical sales, and then once it goes rec, that's just a huge bonus for us. Once these things go rec, they'll probably be more attractively valued, or once we're like right on the verge of going rec, like what we did in Maryland. But since adult use is not a sure thing, we're not going to pay sort of relatively rich multiples for stores in PA when we can go and buy stuff in Jersey or Ohio for what we think are more attractive multiples.
Do you think you'll still try to achieve a similar verticality as you do in other states, or will this one be a bit different playbook where it might be more of a wholesale given your capacity, or how do you guys think about PA?
Well, I think go ahead, Z.
Go good, Jason. Sorry, I interrupted you.
I was just going to say, I think, and Ziad, you would know better. I think we have a similar level of verticality in our stores right now in Pennsylvania. But there's so we would look to keep that, have that be 60% or whatever it is. But because we have so much capacity in PA, we also certainly want to expand our wholesale business. I mean, right now our wholesale business in PA is it's not that big of a number, but Keith always cautions us against just looking at what the capacity is there and saying, well, that could be another, the number would be like, something crazy like $200 million. I mean, there certainly needs to be demand for it as well. But we certainly think that we should be able to be doing more than, we're currently doing in wholesale. Part of the problem in PA is that there's so many operators that have, 18 stores that they largely are doing business with each other. But we think that once there's all this extra, demand across the whole state, that should give us the ability to certainly scale up from, I think we're doing like $3 or $4 million a quarter in wholesale in PA right now. That number could easily, triple or more.
Mhm.
See?
Yeah, they're good. We'll decide on the verticality based on what I described earlier. The consumer, what's in the community amongst other retailers. The quality will allow our quality and our strains will allow us to go up to 60, 65 if we need to. And even if we go up to 70, like in New Jersey, that doesn't limit anything on the wholesale side as long as the demand is there.
Yeah. The other thing in PA is there's other things that, like, even the medical program, they don't allow pre-rolls. So like there's ability to just sort of expand our SKUs and things like that as rec comes on, because I'm assuming that will not be the case.
What's the logic or lack thereof in not having pre-rolls?
They consider it's something to the effect of that they don't believe that anybody smokes cannabis. They think that they like vaporize it, or even if you're selling flower. It's similar. I think it was similar in New York for a while. Maybe in New York they didn't even allow flower sales. Yep. For some period of time.
Market, yeah.
Yeah. So that changed, but they somehow are against smoking. So they don't allow pre-rolls. That's gonna have to change. And the people that we've spoken to and gotten to know in PA in terms of the legislators and the ones that are putting together these bills, the good thing is they seem extremely reasonable, and they're also, even the Democrats in PA are not like the Democrats in places like New York that were massively social equity focused and sort of, in my view, actively trying to shrink the pie for what they saw as the big companies, which you can never shrink the pie for a certain group of companies without shrinking the overall pie. PA, we never hear that kind of stuff, so that makes us feel good.
So what I'm hearing you say, Jason, is you think in the next 3 or 4 months, sometime in the second quarter, we could see approval of adult use, and you think we'll see that roll out potentially by the end of the year?
So yeah, in the governor's plan, I think he had it in the budget for actual revenues on January 1st of next, getting it approved late second quarter, and then having it start on January 1st. One of the things that we've been communicating with them, and we're going to continue to communicate with them, is there's no reason not to start it right away. Like, there's so much more downside. Like, and this is what I shared with Governor Shapiro. Like, look at New York. Look what they did. They passed they passed it 2 years earlier or 3 years or whatever, and then they held the whole market back because of all the cockamamie stuff they wanted to do, and the illicit market totally came in and got entrenched. And show me the downside of turning the program on too quickly. I mean, you could even do it under the medical rules temporarily until you roll out the full rec rules. So that is something that we are going to be pretty vocal about in the coming months, is trying to get them to, in fact, pass the bill and then start rec sales, pretty much at the beginning of the second half.
Great. Well, let's move on to the last state in your footprint, and I'm guessing it's probably the most challenging state. And I think back to the first time I interviewed you, Jason, which I'm sure was not as memorable for you as it was for me, being a young up-and-comer in the cannabis investing industry. But it was at Seeking Alpha, and it was with Fabian Monaco, right?
Yeah.
With Gage? Yeah.
Mm-hmm.
So as you and Fabian from Gage, you had just done the Gage acquisition. You're really excited about Michigan. And without going to a super long story, Michigan turned out, I think, to be a more challenging market than you would have hoped. Yep. Ziad joins the team. Ziad got involved. He was cracking the whip out there. He's finding efficiencies. He's driving EBITDA. And maybe 18 months or so ago, you sounded like you were a little bit more positive on Michigan. But from the tone I take now, it sounds like that continues to be a more challenging market for you. So whether it's Jason or Ziad, you want to catch us up on where you are with Michigan and your perspective on how that market's evolving?
Yeah, so you want to start?
Sure, I'd love to. Look, there are two things that need to happen in Michigan for it to be a profitable state that contribute to in a meaningful way. Number one is for the gross margin to improve from where it was to around 40%. When we took it over, it was around 22%, and we accomplished this. While we're accomplishing this, we have lost some scale because we had to be disciplined and we have to shy away or leave some inefficient revenue. So now that our gross margin is strong and is very healthy, we need the scale. And that's what we're focused on. How do you put those two together? Because better gross margin and no scale is equal to big scale and lower gross margin, obviously. And we are looking at different opportunities. We are having different conversation on how can you take different pieces, put them together while you're protecting the gross margin, bring a scale of an extra 50, 70, 80. And those are not dreamy number. Just come up with 150 million of revenue you put under one place with 40%, and then you verticalize, and that's what will make Michigan profitable. Same as in the pharmacy world, you have Walgreens, CVS, and Walmart. They have triopoly of 85, 90% of no matter how big the market is. So the scale in that space, 10, 11% gross margin makes you profitable. That's what Michigan needs, and that's what we're focused on right now.
Yeah. And the thing I would say is Michigan, the bad news is sort of it's an unlimited licensed state. Pretty much anybody could get not just so there are no caps, but it's not competitive to be able to get a license. That's sort of the bad news, but it's also the good news. If we can put together a group of assets, nobody has really gone out and put together a group of assets that's got $150+ million in revenue. And as Ziad, mentioned, Walgreens, what were your gross margins, 17% or something like that? But when you're able to spread your OpEx across, thousands of stores, in the case of Walgreens here, we have much higher gross margins than 17%, but if we can spread them across, $150+ million worth of revenue, then it could be really profitable. And there's nothing stopping us from getting, bringing more in and having it be $300 million. Nobody's really done that yet. The thing in the internal conversations that we have a whole lot and we've had over the last few years is just that's great. But if we could take $1 and spend it in New Jersey to buy an asset, or in Ohio, or one of the other places that is much more profitable in the here and now, that's sort of where we prioritized our spending. The good thing about the Ohio dispensary that we're bringing online, that we should close in the next few weeks, and any other ones, is we're going to run that out of Michigan, so we should get the benefit of some of that scale. But some of these other things we're working on, they wouldn't cost us any cash. There's tons of operators in Michigan that are looking for a solution of how to get themselves over the hump and get more profitable as well. And we're working on some ideas there, but it wouldn't be something that we dedicated, cash to make those acquisitions.
So it's not a perfect fit, but that's like the holy grail conversation we have about California. The same idea of no one's really done that, really high quality, vertical, strong group of assets with enough revenue to overcome the pricing compression issues we have, all the cost structures that are inherent in California. So
yeah, and the
really
good and compared to California, I know in California we're almost all retail. We have a smaller cultivation, but most of that product is sold through our stores. It's we're only growing I think 300 pounds a month or so. But I know that the people who've gotten really hurt, and I've had some investments through my fund in some of these companies, were the brands, because they just weren't getting paid. It was really a struggle. The good news in comparing that, and I say this to Ziad all the time, in Michigan, thank God in Michigan that our cultivation and manufacturing, it's not even enough to supply our current store base. We're still buying a significant amount of product from out on the, from the wholesale market. I feel not that Michigan's been a walk in the park, but that's a much better position to be in than if we were relying on wholesale sales in Michigan, because then you're really it's it'd be a lot harder than it is.
Mm-hmm.
California is such a tough market, Jason, that sometimes you even hire companies even hire you as an analyst to cover them, and they don't even pay you.
That's a shame. That's a shame. Is that only happening in California?
To me, only California.
Sorry
Yeah.
about that.
Yeah, it's all good. I just thought it'd be cool to cover California companies. Then you realize sometimes companies are so wounded they're just not paying anybody, including you, Jesse.
Yeah, don't take it personally.
No, it's all good.
And
It's
I'm
all
not
good.
laughing at you. I'm laughing with you.
Yeah, I don't
With
expect
you.
a lot of sympathy. I think everyone's been through it. It was just interesting to feel that pain for the first time, where it's like, okay, so I'm going to cover you, then you're actually just not going to pay me for it. All right, that's one way to do it.
Yeah, that's a
Yeah.
shame.
So the last thing I want to talk about before passing the mic back over to you, Morgan, is on the balance sheet side. And last August, guys, you did $140 million refinancing, I guess, and pretty good rates on that, 12 and 3/4, maturing in August of 2028. And I thought at the time, Jason, I was like, interesting timing, good from a conservative perspective to get this done. But I thought, well, this is right ahead of maybe when rescheduling gets done and maybe more capital is going to come in and maybe rates are going to come down. And turns out, once again, Jason, you had the right idea here and it was wise to get that done ahead of time. So congratulations on getting that done. Can you talk a little bit about where you are in the balance sheet and if you plan to make any more moves going forward?
Hey, Jason, before you answer, I just want to add one thing to what Jesse said. Not only did we did it early, but then also we agreed with a great lender that we carved $100 million out of that 140 that we can pay down through a mortgage loan. So even if new money came in and even if there was a reset, we didn't take a risk just to be stuck. It was a risk that even if new money came in, we could have still reduced the interest rate.
Right. And we can still do that if something happens. I mean, I know there's a lot less optimism now than there was, say, last summer. But yeah, we could refinance out $100 million worth of that debt with mortgages. In terms of the balance sheet at this point, I mean, we mentioned it, I think, in the script, and maybe even Ziad mentioned it earlier on this call. We are working on some different strategies to lower our interest expense from that point, from the 12 and 3/4 or so. And that would be part of it would be, refinancing through mortgages and things like that. But we feel like, we got that set. We sort of made ourselves safe from the debt cliff perspective. And it gives us, and we worked at the lenders at Focus Growth were great. They gave us that optionality to be able to go and pay down a significant portion of it if we can go find lower rate debt elsewhere, and that's what we've been working on for the last several months.
Yeah, with all the real estate that you own, I'm guessing that glass house deal looked pretty interesting to you.
Yeah, that was similar to what we would like to try to do for sure. Except we don't know, what do they have, like a 3 million square foot greenhouse or something crazy, but
yeah, I think
we got to.
They've got about 3 million planted. I think it's 5.5 or so total.
Yeah, that's unbelievable. I have to get out and see that. I mean, I can't even imagine the scale of that.
Oh, you haven't been out there yet?
I have not been out there.
Oh, cool. Yeah, you have to come out, and then we're starting to plant our farm, which at full scale will be over 8 million square feet. So if that's all sun grown though, not well. There's a sun grown too, but ours is outdoor rather than being in a greenhouse. Yeah. So if you come out the glass house, make sure to let me know, and we'll get you up to our farm. It's about an hour and a half away from there as well to check that out.
Yeah, absolutely. But yeah, that's exactly what we would like to do. Figure more from right now we've us and most of the industry has most of their money is from non-bank lenders, but if you can get loans from banks, it's the rates are a lot more attractive. The banks they're a little more risk averse, so it takes time. But the fact that we've got all this real estate is we sort of are practically every day we say, thank God we didn't do any sale leasebacks.
Yep. And Ziad, do you want to touch a little bit on the tax on your tax position? I know that's a hot topic in the industry relative to 280E taxes, and if somebody's showing free cash flow at this point, but they're not paying those 280E taxes, is that really free cash flow? So, what's your perspective on that topic, and how is TerrAscend handling their tax position right now?
Yeah, that's a great question. I feel that there's a lot of misunderstanding, a lot of chatters that describe the wrong situation about taxes, and I think in some cases it gives the impression to the reader that you're in default on your taxes, or you're late on your taxes, or you haven't paid your taxes. So maybe I can attempt in a couple of minutes here to explain the situation, right? So we have a legal opinion that says why we took the position that we took, like so many other companies, and we are paying taxes and we are not delinquent on any of our taxes without counting into 280E. So our position is we owe taxes, but we do not owe 280E taxes. And we decided this based on a reputable firm that gave us a legal opinion, and that's the position that we took. So there are two paths that could happen from here. The happy path is if the IRS ever comes back and talk to 280E, they could either agree with our position, and in that case, that all that tax uncertain position will disappear, because you have to put them somewhere, and then you put them in under Keith's accounting methodology that, hey, they sit in there, but that's not that. We don't owe this. There's no cliff where you need to pay it. We're not like
we're not delinquent on it.
We're not delinquent.
We have not gotten notices from the IRS that say you owe this 280. In fact, they gave us a refund for 2020.
So we have paid 280E taxes in the past. One of those years we got refund back. There's another year that we're still on refund. We're still in waiting period. We haven't heard much about it. The other 2 years that we have not paid the 280E, they're sitting on our uncertain tax position. Now let's play the unhappy path, or what some of the writers consider them as that. Let's say that the IRS did not agree with us on our position, and that they didn't agree about the opinion that those taxes are due. Then we will get into a conversation, and then we'll convince each other, and then it most likely will end up in litigation. And then in that path,
but they are not allowed to ask. They are not allowed to do anything. Sorry to interrupt you, Z. They're not allowed to do. People seem to think that like the IRS could just come and like clear out your bank accounts. If they decide that you owe them money, while you are, first of all, we're not even at the point where they've never even notified us that they want that money. But if and when that happened, and we go through all of the discussions, which will take a while, and then they come back with their decision on whether they want the money or not, all of those points along that, they are not allowed to move to put any tax liens or anything like that. Even beyond that, then let's say they come back with this unhappy path and they say they want, they believe the 280E is valid and they want the money, then we get to file an appeal or go to court. And you can either go to IRS tax court or to a district court. And even during that whole process, until that court case is resolved, they're still not allowed to do anything in terms of, going and saying, and trying to, take the money or anything like that. So that is, that's years and years away. And that's where we think that, maybe
but then at that point, years and years down the way, let's say then they're proven to be right. Then you have a negotiation. There's a case study in California where you will pay 1/6 over 10 years of what you. So it's not a debt that comes due even in the most unhappiest path. And then that's why I say the way it's counted today as part of debt is not the right way to look at it.
Yeah.
Well, great. That's helpful color. Over to you, Morgan, to bring us home with the last section of the agenda.
Who knew that we would have to become tax experts?
Oh, it's crazy. And by the way, by doing what we did, that makes it so the statute of limitations on going back 3 years, like if and when, say, we win the David Boies lawsuit or something else happens, like we're going to be able to go back and get that refund that we put in for what was it, 2022. Like if we didn't do any of this and things ended up changing and we win this David Boies lawsuit, then we're out of luck on all that money that we paid in the past.
2021.
So, I mean, not only, I know everybody and it's, the stock action and in the whole sector makes everybody just look at the pessimistic view of everything. And these companies are going to owe all those taxes and and does and whatever, the government's going to come take it, whatever it is. In fact, it could be the opposite. The industry could end up getting back billions of dollars in taxes if say just our David Boyce case works out well.
And
what if you
what if you lose if you were to lose the case, would there be penalties and interest then?
No, we're not. I mean, that's just one of the ways that could sort of blow up the taxes. We could,
No, I'm speaking just with the IRS, not the David Boyce thing.
Yeah, then you go in and you do it. You have a negotiation with the government, and as Ziad mentioned, it was Harborside, right, where they they didn't pay their taxes. Like I think they just completely. I think it was a little different, and they went to IRS tax court, which I'm told is not where you necessarily want to go litigate this, because it's like the IRS's home field. But like they hadn't paid it for I think it was 10 years, and then the IRS worked out a payment plan with them where I think they were paying, I don't know, I think it was 15 or 20 cents on the dollar. Yep. I look at it as and I don't think we're going to get to this point because I think that we have enough shots on goal, and we have such a strong argument that these taxes are in fact not due. But the fact is, if it ended up being the completely unhappy path and we got all the way to the end of the road, the IRS don't want to, if you owe them money, they don't want to put you out of business. They want to, I look at it I've had a few relatives that I've lent money to who haven't paid me back. And the thing that pisses me off the most is when they completely ignore the fact that they owe me the money and act like nothing ever happened. I appreciate it much more if they come to me and say, hey, you know what? I owe you the money. I know I said I was going to pay you. I can't. Here's what I'm going to do. I'm going to give you $100 a week for the next whatever. Even if it doesn't make a dent barely in what they owe you, it feels better that you're at least making an effort. And it seems to me like that is what the IRS does, or what they did in the case of State House. They just want they want to see that you're making an attempt to do something.
Yeah, and then with the legal opinion, then there would not be any penalty because there is a legal opinion.
Mm-hmm.
Right. And by the way, the fact that practically the whole entire industry is taking the same approach. I mean, there is some strength in numbers here, because it will even before the IRS's job cuts and all of that, that's a big job to go after practically the whole entire industry to start collecting those taxes.
And then meanwhile, if rescheduling takes place and rescheduling addresses the 280E, let's say in a year, 2, 3, 4, while we're doing the other case, it would conflict with you trying to go on past taxes when you have a legal opinion, while the current situation has removed the 280E if rescheduling happens. So that's another.
Yeah, it'd be less important for them if it's only the past taxes, and because they went away going forward because of rescheduling. It seems to me that the IRS would be, even less dedicated towards fighting as hard on this whole thing.
Yeah, well, it's very interesting for sure. But just zooming out a bit about the industry in general, and I know this actually is pretty much the industry in general talking about taxes, but just kind of curious how you guys, and maybe Z, this is a good question for you to start, is, you mentioned a lot about the consumer and how you guys are looking at the consumer and addressing the consumer. I feel like every day we talk about the price of eggs and, how it's hitting consumer wallets and things, but how are you seeing the consumer in this environment today while they're still dealing with inflation and things that are impacting their wallet? And, how has that kind of evolved, and even generational impacts like Gen Z versus millennials and things like that? How are you see the state of the consumer?
Yeah, I can start. Look, I'll come back in a second to the cannabis consumer, but overall, you would feel that there is pressure on the consumer pocket, and sometimes you wonder: are you in a beginning of a recession? You see that the basket size could be smaller in some areas, but the trips are more frequent. That is a reflection on dividing your paycheck into different priorities of shopping. So we're seeing this. There are you just have to adjust as a retailer to that pressure, and you have to meet the consumer where their pressure is. And I gave an example earlier on how do you help them by condensing the offering in bigger or creating a bigger offering in volume with a better price. That's where sometimes you launch the 14 gram for your value brand in those places that are super sensitive to prices. So how are we seeing it? We're seeing even with the pressure, it depends from one state to another. New Jersey is seeing it less than, for example, than Pennsylvania, rural Pennsylvania, or Michigan. Also, what we see that shoppers are the shoppers that are attached to the premium brands are less sensitive or less impacted by that pressure, or they have less pressure on their pocket. It's the 20-80 rule, right? You have 20% of your consumers who spend 80% of your revenue. So that pocket is still the healthier. That pocket is the one that dealing with the pressure more than the 80% they're spending 20%, or the soccer mom that has a regular every 30 days trip or every 45 days trip, and those are staying constant and being less impacted.
Right. And quality is still always going to protect you as well. People, you guys know how it is. Like cannabis consumers, they hate to feel like they're getting ripped off, and they'll pay up, for quality, because they know that it's, that it's not as easy to produce. So that's another thing. I mean, we've definitely, I think, Ziad, I haven't looked at like the most up-to-date BDS numbers for Jersey, but even though we're number one in market share, we're probably not number one in units because we play at the higher end from a quality and therefore pricing perspective.
Yes, our average pack size, almost in every state we are in, is higher than the average pack size of the state.
That's good revenue.
Yep, that's right.
It's interesting too. We talk a lot about the, especially the younger generation of legal age. Their alcohol consumption is just way lower, and are we picking that up? Is that kind of being absorbed as a legal cannabis buyers, or are you seeing any kind of anecdotal behavior there?
I got my own anecdotal behavior. I mean, I used to, probably have, two drinks a night, probably, at least 5 nights a week. And now I probably have 2 drinks a week total. I consume more cannabis. So I can say just from my own perspective, I mean, I was talking to somebody who works at a vineyard a few weeks ago, and he pointed out to me, everybody seems to just be, or practically everybody seems to be consuming less alcohol. And the thing is, like, when you're drinking practically, having a drink practically every night, like so many people, do or did, then you don't notice that it makes you feel like crap the next day because because you're doing it every single night. But when you only have a drink, one night or 2 nights a week, and you notice that you feel like crap the next day, it becomes pretty clear, and then it drives you to even want to consume less alcohol. So I think everybody, from a public perception perspective, things are certainly changing. I think the Surgeon General wants to talk about, wants to put warning labels about how it causes cancer and all those other, like nobody would, I never even heard anything about alcohol causing cancer up till, a few years ago. So there's certainly a major perception shift that's going on out there. And like I said, it's affected me. And also when people consume cannabis and see that it doesn't impact them the next day, unless maybe you're like me and you're a slow metabolizer and if you take a gummy, it starts kicking in the next morning. But generally, that's why I stay away from edibles. But generally, it's like, it's so much, you can live a much more healthy life and live things to the fullest the following day. And people realize you can't do that with alcohol.
And then look, if you look at Flow Hub, if you look at BDSA, if you look at Carnegie Mellon, no matter what source you look at, there are some things that we are learning more and more. 47% of Americans today have tried cannabis. The support for legalization of cannabis at an all-high 88%. More than 1 in 3 women use cannabis today. More than 80% of consumers believe in the medical benefit of cannabis, like treating pain or terminal illness, etc. Half of the American population shop in legal dispensaries, or half of the users, and they are generally today more satisfied with the experience and the customer service versus the intimidation that used to happen. So yes, I think the data is coming stronger and stronger, supporting what Jason has said as far as a shift from alcohol to cannabis, and the science is supporting it, whether it's the HHS paper or the numbers that is coming from the liquor side. So yeah, I agree.
Yeah, we just need to, part of the messaging we need with the federal, with the administration is the fact that, there's all these, illicit grows, whether they're, cartels or Chinese nationals that are growing. They're not following the rules. They're selling unsafe, untested, adulterated product. They're not paying taxes. They're being sold at bodegas where they can take credit cards and all the rest. Like there's no issue with the demand for cannabis overall. It's just the fact that, it's more of a regulatory issue that the people that aren't following any of the rules are able to have such an advantage over the operators that are following the rules.
Right. Yeah, the complete lack of enforcement is incredibly frustrating for all of us because to your point, we're missing out on the revenue that should be captured.
Yeah, because the demand is there and growing for sure.
Yeah. So with that, last question for me, and I'll pass it back to Jesse is, what do you both see as opportunities in the next few years in legal cannabis? And is hemp, hemp beverages, do you guys think about that at all? Or, how do you think about it for the next couple of years?
Yeah, I'll let Ziad take the hemp beverages part because he's done more work on that than I have. But in terms of the opportunities, I mean, we feel good that we haven't said it in a while, but we used to always say, we're deep and not wide, and that we're only in, we're in 5 states, about to be 6 with the Ohio dispensary, once we close on that. But we see a path to being able to drive significant growth for our company just by adding, from Pennsylvania going rec and adding and getting, deeper in say New Jersey and in Ohio. But there's so many greenfield state opportunities for us that we feel like we can we've got a huge amount of growth ahead of us, and we'd get the benefit of the scale and all that. I mean, our numbers for the fourth quarter, we've certainly made good progress on gross margins and OpEx and all of that. But that's, and I think it compares relatively well with a lot of companies that are a whole lot bigger than us. But once we get to the scale that they have or the revenue that they have, we feel like we should be able to be, driving even better margins and, operating margins and all that than we currently have. So that's sort of the path that we see, from a federal reform perspective and all that. That would just be gravy. We always look at the business, you probably heard us say it a million times, and others, we're looking at it like we're running it as if running the business if the situation is not going to change from a reform perspective. And if that happens, it'll just be gravy. See?
Yeah, from him perspective, look, the Farm Bill was extended for a year. We'll learn more whether it goes for 5 years or not soon. We know that edibles and beverage are the 2 categories that are the most legitimate that we're watching. I've had conversation with many players in the space. The reality is you can look at hemp either as an opportunity or as a threat. If you are in Florida, it's more of a threat. If you're in Texas, it's more of a threat. If you're in New Jersey, if you're in Maryland, if you're in Pennsylvania, because of the regulation and because the stand of the state on hemp, it's not a threat in those states. So for us, when we decide to play in hemp, it's going to be an opportunity to have a reach or to have reach into the states that we are not in. So and it's a different model than what we have today. It's a new business model. It's a distribution model. It's not a hard model to do because it's a delegated model. It's a co-packing model. It's a decision that needs to be made. But because what Jason described is lower hanging fruit, New Jersey, Ohio, the growth that we have, that we are focusing on to get the scale and to go wide, we continue to put it in the watching square, and we'll make the decision at the right time.
Yeah. And not that it's not impacting, I'm sure it's impacting us in our current states, but it's not as acute of an issue as it is. And it seems like it's a more of an acute issue in like conservative states that don't have either rec programs or even, strong medical programs.
Yeah.
Well, Jason, wanted to close it out with you. Things feel more uncertain than ever in our industry. It's been 1,486 days since MSOS peaked at $55.91. Today, it's under $3.
Yeah.
What would you say to a concerned cannabis investor?
Yeah, I would say, if you don't mind, I'd rather do it more from a TerrAscend perspective. Not that I want to throw shade on anybody else, but I know what we've got, so I can, speak more confidently about that. I think that, at this point, and I sort of shared this in an impromptu way at the end of the conference call yesterday. But at this point, we're trading at about the value of our real estate, and that doesn't even count the fact that we got $27 million in cash. Now, somebody can certainly say, yeah, but you've got that debt. But our business at this point, we believe that supports the debt. When you compare us to other operators that are less less real estate rich, it's certainly, it is their business that's supporting the debt. So with us and an investor that comes in, that would buy stock in TerrAscend, my view is you either get the real estate for free or you're getting the business for free at this market cap. So that's what I would say and that's not, that's more of a new argument because of, the fact that the stock has come in so much. But, as a stock picker, there's certain at certain points when a stock, I'm not somebody that, usually will average down as a stock is going against me. But at a certain point when you're getting some chunk of that business for free, that's where I start to, get a bit more, fortitude and confidence in the fact that, the risk reward is asymmetric at this point. So that's my view on, or what I would say, or what I said yesterday, as it relates to investors in TerrAscend. That being said, there's lots of other good companies out there as well, and I think that that applies to a lot of them too.
Well, great. That's helpful context. Morgan, why don't I throw it over to you guys? We always close it out with our AI segment, which is where Morgan asks Grok, where we've got a new Grok 3 right now. So we're going to ask Grok. Is it Grok 3, Morgan?
Yep.
Okay, we've got the new Grok 3. Yeah, and just I was messing around, guys. Jason, Ziad, I don't know if you've ever done this, but I've been throwing financial statements in there and asking it to summarize this company's debt or what concerns do you see with the debt, and it puts out amazing answers. If you ever have a company with a complex situation, you just upload the financials. You ask it to summarize them or ask questions about it. It's a fantastic tool for that.
I got
Let's see what you got, Morgan.
Yeah. Absolutely.
All right. So I asked Grok, what are the typical characteristics of investors in a sector down 95% from its peak?
Ooh.
And Grok said these investors are a unique breed, often driven by a mix of psychology, strategy, and risk tolerance. While each situation varies, here are typical characteristics. High risk tolerance, contrarian mindset. They often go against the crowd. This is buy when there's blood in the streets mentality. Value-oriented, Many are bargain hunters looking for undervalued assets, analyzing fundamentals like surviving companies' balance sheets, cash flow, market share. Betting the sector's decline has left some diamonds in the rough. Speculative and opportunistic, those are more the gambling mindset, less concerned about the fundamentals. Long-term vision, subset believes in the sector's eventual recovery due to structural shifts or innovation. Emotionally resilient, they can stomach the gloom, negative sentiment, and widespread panic don't phase them. They're either desensitized by losses, dead inside,
Dead inside like
or
Morgan.
thrive on the chaos. Niche knowledge, often they specialize insight in the sector, giving them confidence where others see ruin. I think that's fair for all of us.
Yep.
Smaller capital allocators, big institutional investors typically flee, leaving retail and small funds or maverick VCs. These players can afford to take flyers and long shots without moving the market. They give a real world example about Jeff Bezos and Amazon after the stock declined 90% after the dot-com bubble. So in short, there's a mix of calculated risk takers, dreamers, and stubborn optimists, often betting on a phoenix rising from the ashes.
Absolutely. That sounds like it describes this space pretty well. Somebody texted me, I forgot the other day, I forgot 3 days ago or so, and I said to them, I gave them, I forgot which movie it's from, but thank you, sir, may I have another. Just like, I don't know, maybe we're all a little bit glutton for punishment, but on the other hand, I also tell like my investors in my fund who, obviously our TerrAscend's position has not driven great performance over the last few years, but you also have to look at it and it's, I tell them, this stock's not going to go down another $15 from here, in terms of like the pain that it's caused already is, I know that now it feels like every 5 cents is devastating, and from a percentage perspective, it is, and any stock could lose all its value. But just in terms of the impact that it's had, as long as you don't keep adding to things as they're going against you, at some point it just doesn't have the ability to have that same amount of impact on you. So I don't know if that speaks to what you're saying, but certainly this sector has been, in retrospect, we've all been a little bit glutton for punishment.
Absolutely.
Yeah, it's been brutal, man. Morgan and I talk about this a lot, and I think we're similar enough ages. We were here for the .com thing, and I thought that for me that was the worst thing I'd experienced was a .com boom and bust. But I was in my early 20s at the time. I didn't know what was going on. Then I was the subprime thing. Maybe if you're in certain spaces, in 08ish, that was super painful. But in terms of the 4+ years and the 95% and man, the emotions associated with it, just as I talk about it, I start taking deep breaths. It's been a painful one. It'll be cool to reflect once we have some recovery and see what lessons learned you can take from here, because I feel like right now, at least personally, I'm still kind of reeling a little bit, but I feel like once it recovers and we step back, hopefully there'll be some valuable lessons to be learned. Yeah,
it's going to make for a great movie at some point.
Well, all right, guys, I really appreciate you joining us. I know it's late here on a Friday, so great conversation to talk about TerrAscend, and also appreciate the insights about the industry. Always fun to catch up with you guys.
Absolutely. Same here. Good to see you guys.
Yep.
Thank you.
All righty, Morgan. Good to see you as always. Thank you all for listening and now watching on YouTube, and we'll see you guys next week. The views expressed in this podcast are provided for informational purposes only. Nothing we said should be considered research or recommendation. All investing involves risk, including the loss of principal.